Good afternoon. My name is Megan Edwards of Focus Communications, and today we're getting the latest company update from Trigon Metals, which trades on the Toronto Venture Stock Exchange under the symbol TM. Joining me today, we have President and CEO Jed Richardson. Welcome to the show.
Hi, Megan. Thanks for having me.
And Jed, for those new to Trigon's story, can you please give us an overview of the company and your operations in Namibia and Morocco?
Sure. So Trigon is a copper company. We recently paused production at our mine in Namibia, but we're doing so we can really dig in, get some more information, and come back as a lower cost operator. We're targeting operating costs between $2.60 and $2.80 per pound and we can get there with about 6 months work. So that's where we're at there. And then we're also exploring in Morocco. We've got the Silver Hill project in Morocco, and we'll have some new drilling starting up there. We recently did a silver streaming deal that'll bring about 25 million US into the company, and that's actually that's actually to get us into underground development. So we've got a lot of growth ahead of us. When we get up and running in 6 months, we'll be targeting producing about 8 million pounds per year, and then once we get underground, our growth profile will head up to 30 million pounds in 2024. So a lot of growth and some good quality jurisdictions to be involved in, Namibia and Morocco.
Now, earlier today, the company announced drilling highlights from the Combat Trend and the Kavango Pit. Can you run us through this release and the significance of these drill results?
Absolutely. So, and this is really the crux. This is really what is giving us the confidence that by focusing our operations around this mineralization, we can come back as a lower cost producer. So this is a sampling of some holes. We put out 6 holes this morning. I'll just kind of read out some examples. 5 meters of 3% copper with 13.6 grams silver, and in the same hole, 7 meters, 6.9 meters of 1.6% copper at 13.5 grams per ton silver. In our open pit, we've been targeting getting grades of around 1% copper. So we're now looking in this area at grades closer to what we're expecting underground. Our underground mine grade, we're hoping to achieve 2.6% copper, and we're seeing this in mineralization that we can mine from surface. Going on 11 meters at 2.6% copper, 75 meters down the hole, 75 meters down the hole, dipping at 77 degrees is around 55 meters from surface. So this is all material that we can access from our open pit, get through the mill, and get high recoveries from. This is in contrast to what we were dealing with in our central pit, where we were finding thinner areas, veins of mineralization. We were dealing with a lot of oxidation, and we were struggling with grade control. So going through the mill, we were getting around 0.8% copper. We weren't hitting that one. Now we're looking at much larger intercepts: 11 meters, 9 meters, 6 meters, 7 meters, 10 meters of massive sulfide copper mineralization that we can mine from, and with that, we can really drive our operating costs down.
And the company has recently pressed pause at Combat to optimize your mine plan on the project. Could you expand a bit on this and provide an overview on what investors can look for from the company in the coming months?
Sure. On top of what we were, what I've just said, you can see the two trends here. Initially, we were mining in the central pit in this area here. The exploration that we've done now is along the combat trend, and here we are in the Kavango Pit. What we've recognized is that these two trends have different natures in the mineralization. Our mine plan started in the central pit because it's closest to the mill. Our mill is just west of here, literally just off the map, and it's it's shallow mineralization, and we're looking to get that material in before we move to the other areas. This is actually our second. This is where our second pit was planned, and our third over here. In mining here, our plan was, of course, deliver the ore, and then waste would go into filling a hole we have in this area, and then we can start mining pit 2. But when we were struggling with grade and recovery, so in the central pit, it was slowing down our production. It was increasing our operating costs. By now focusing on this more tabular or massive mineralization in the Kavango Pit, we can pick up right from where we left off, except dealing with higher quality mineralization. So higher grades, as you can see from the drill results. It still is very close to the mill, so we can immediately get in there and start mining, and then we can take waste and finish the filling that we have to do over in the pit 2 that I've marked here, and hit production milestones for one, but most importantly, get our operating costs down. The difference between these two areas is really quite notable, and I think that's illustrated pretty well by the results that we're seeing in that we've announced this morning, and we'll continue drilling in this area over the next few months. So we're drilling here in the Kavango Pit. We call this area here, we call it the Fat Avo. For avocado. This is Namibian humor, we'll call it. But we're also recognizing that there's some gaps in here where we need to do, where we'll be drilling to see if this mineralization connects. And if you look at the release, I'm gonna jump back and kind of highlight. So these are all our planned holes. And you see, I reported some holes, infill 2 and infill 4. These holes are actually between the Kavango Pit and the Fat Avo. But we're already seeing that that's mineralized material. So here's one of those holes. So 23 meters down the hole, 2 meters of 1%, 4 meters of 0.8, and then 7 meters of 1.4% copper. And this is in an area previously not known to be mineralized. And similarly in infill hole 6, 6 meters of 1.2% copper, 20 meters down the hole, and then 10 meters of 1.7% copper, 56 meters down the hole. So like even in these zones between the would-be pits, we're finding more mineralization. So we've got a lot of work to do in drilling this out, and then put that into resource and build a mine plan around that. And this is all work we can complete in the next 6 months, and then come back a much stronger operation. What I've just highlighted in this area. We also need to do the same in the Fadavo, and in the area, in these areas here between what would have been pit 2. We call that ore capping, the ore capping pit. We need to drill between these areas. We recognize in our 3D modeling that there's a whole area that's yet to be tested, and really see if we can continue this mineralization right along the trend. One thing I think that gets lost in the story at Combat is there's still so much exploration to do. All of the work that I'm talking about here is all being done in this small area here. The potential for mineralization, though, extends the full length of this property, over 35 kilometers, and all of these red stars are known locations of copper mineralization. So we'll do this work here, get this mine back up and running in short order, really. Come back as a stronger operation at lower operating costs. But we've still got a lot of work ahead of us testing out areas like this, the Schlangenthal, the Atavi area. These are all areas that could be lookalikes for what we have at Combat, or could prove to be continuous trends of mineralization along the full 35 kilometers.
Well, before we wrap things up, do you have any more slides that you would like to show us?
No, that's it. Though, I've been told I should make sure that you all get a good look at my my disclaimers and disclosure here. So pay attention there. But I think what we've talked about will really gets the point across of what we wanted to capture in our release.
Perfect. Thank you so much, Jed, for coming on the show today. I look forward to having you back on for more Trigon updates very soon.
Thanks so much, Megan.